What have we made investments in? If you question 10 different testing investors, I'm sure you'll get 10 different replies. But there's a good chance that many of those responses will have some overlap or similar inference. Of course, there was the rhetoric that legacy autos could come in at any time and eat Tesla's lunch, but they just couldn't be bothered yet as it was just some niche and didn't even appear profitable, of which it wasn't really back then. So why bother? Of course it ended up proving to be. I invested in Tesla because I thought EVs were the future and Tesla was so much further ahead than anyone. Well, there was practically no one else back then to even be ahead off-white challenging, as everyone is still learning to this day. And I was correct. Some invested in Tesla as a tech firm rather than an automobile company. But EVs grew significantly, and Tesla maintained or even expanded their lead. They also became extremely lucrative, with some of the greatest margins in the auto industry. As a fervent auto enthusiast, I invested heavily in Tesla as a company. However, I also understood that Tesla is more than just a car company. It also manufactures smart cars, which I saw as the next big thing in technology. I'm not sure how much people cared about this in the end. Maybe most people were content with a moderately sized screen for navigation and a smartphone connection, and that the sport of trying to predict the future and then making a bet based on that prediction was more important. I love the smart car technology that comes with my Tesla, but maybe it's not as important to most people as I thought because there are plenty of smart cars still on the market. That was my assumption and the reason I gambled on Tesla. But some people thought the company was more about software than hardware because it was electric as well and had incredible ranges and an unbelievable network of charges, making long-distance travel with electricity possible. Some companies announced absurd pricing estimates that were absurd at the time, but Tesla beat them and did so early. These price targets were based on FSD and robot taxes. Without those things, Tesla achieved those goals. Tesla looked to grow EVs to insane levels. We were told quite clearly 50 growth year over year, and even more some years. This was clearly stated many times, in fact, with some pretty substantial physical evidence to back it up, like the largest factory in the world being one of them. Not only that, cells that would cost even less and have higher energy density. And Elon was wrong with all his targets he gave us, and Elon was wrong with those targets he gave us. Unfortunately, these factories cost a lot to run and are not doing high quantities in production in order to reach the right economies of scale, so the margins are low from these factories. And now, since Texas is also making the 4680 sales, the margins are likely even lower. In fact, I bet 4680 sales are quite expensive at such low quantities. So despite not seeing evidence that Tesla can achieve this growth, the stock price seems to be recovering nonetheless, which tells us that Tesla is not valued as some high-growth, high-margin car company, which, to be honest, it looked very much like that to me a while back, and was very exciting to see the stock price didn't care. In fact, it cared significantly more about the impact Twitter had, which is somewhat nonsensical. As long as the business fundamentals are there, then it will thrive and grow anyway. Twitter is just about in the rearview mirror now, and the stock is better for it, with technical analysts saying it's going to run to 300 now. In fact, I think if we had Model 3 Highland launch Mexico breaking ground advertising and Cybertruck delivery event, it could run to mid-300 assuming the economy holds, and the economy may do more than just hold. The markets might go for another bull run. Even yet, we don't have 50 year-over-year growth. All right, we might see 30 growth this year still, which is not too bad, although minimal ramping throughout the year. As for next year, there's still capacity at Berlin and Texas. So Tesla just needs some more sales, and perhaps Cybertruck might contribute a little too, but basically impossible to see 50 growth in 2024, so high EV production growth isn't the investment here. And my research from investor sentiment would agree it's all about the future. Just give Tesla enough time to get these things sorted, and it will be insane. The industries that tests are disrupting are the biggest in the world: energy and transport, and labor potentially too. It's all coming together. Tesla have so much capital and cash flow along with resources and the best engineers on the planet working around the clock to solve these challenges, combined with a charismatic, highly motivated leader who possesses all the global connections necessary to reach a higher level. Even the most popular person on Twitter, who has a history of accomplishments and catchphrases like "don't bet against Elon," suggests that although it will take some time, Elon and Tesla will succeed and reach their goals. The goals being unfathomably rich for all Tesla investors. If they have the patience to wait out this decade, there's no doubt that some of these amazing business ventures will pay off and propel the company forward, just as they have done time and time again. Examples of these include the Model S and X rising from the Jester Roadster, the Model 3 from there, and the Model Y from there, along with technology developing concurrently with production like FSD and Dojo FSD. However, the concept of robot taxis elevates it to a whole new level, because anything that can replace full-time human labor has enormous value. Just consider how much a full-time Uber driver makes. That's the value of a robo-taxi if the driver didn't need to sleep. These rubber taxis are becoming more and more popular, but I don't think they will replace all forms of transportation anytime soon. I mean, markets like India will be extremely competitive, but even 10 million of them will operate in easier places throughout the world. If they can charge $30,000 per year in fares, that's $300 billion annually, which is a really large amount. This is why some people believe that Tesla may reach a $10 trillion market cap. It's difficult to resist investing in a company that aims for this end, likely believes he can achieve it. Along with the AI days, we get to see just a glimpse of the levels of complexity tests that are delving into to achieve this, as it is really hard to do, but obviously worth it when you look at those numbers again. And yes, there's also the potential test to sell 20 million EVs a year at $10,000 gross margin, that's $200 billion gross profit, and then energy too, and then robots, which could be bigger than everything else combined. So I'm of the belief that this is the investment, a massive asymmetric investment with 10 to 20 times return perhaps as early as the end of this decade. This is what everyone is prepared to wait for, and not concerned about year-over-year growth as early as now when testers still have so much more left to see manifest. But I think I can sum it up as Gen 3 production, which is extremely low-cost production, with very high output, a way to get enough EVs produced for numbers of up to 20 million a year, whilst costs are low enough to also have the demand to meet that. It is possible to significantly lower factory size and footprint by using the dry battery electrode technique to supply 4680 cells. This will make it feasible to scale up battery production and achieve sufficient sales for an electric future. Rubber taxes replacing labor and transportation, energy savings, FSD software as a service, offering more time for drivers to focus on other things while in the car. As Elon says, so hard to fathom, he can hardly imagine what an economy would be at that time. More abundant, decentralized, renewable, cleaner energy and robots are also supported by governments with climate change movements. Fossil fuels are not lasting forever. If oil ran out tomorrow, I imagine that most people wouldn't make it through several months. There must be a backup plan eventually. These are Tesla's missions, and the investors are patient and willing to wait the required amount of time. They don't care as much about the small improvements we see month over month because they see the big picture, where the potential upside greatly outweighs the potential downside. If this is the case, then all that's left is to wait. Many Tesla investors, however, are aware of this and advise waiting until 2030 because it's still early in the game. Other investors, on the other hand, also want to know what the company is worth and figure out how and where it derives its value. They also want to know what other investors see that they are unaware of because they don't want to miss out. I believe I have done this in this video, but I'm interested in reading and hearing everyone else's take on a concise explanation of what Tesla is as an investment.